Now, traders at Axis Bank say mid-dated bonds are recording pockets of demand, especially the 2033 paper, with bids hovering around 20%. On the T-bill side, the market is expected to continue to trade on a slightly bullish note, given positive system liquidity. Ademola Osuntoki, Treasury Team Lead at Axis Bank, joins me now for more market movements. Ademola, thanks a lot for joining us on the show today. The market really is resuming following yesterday's holiday, but walk us through the developments we've seen in the market space from liquidity position, and now we're also seeing investors position ahead from the fixed income, from the bond to the T-bills market.
Good afternoon, David. Thank you very much for having me. So I think, as you've mentioned, market is currently awash with liquidity. At Wednesday, it was about 1.5 trillion. So as a result of this, what we're seeing this spur activity within the fixed income market. Essentially, what we're seeing is a bullish note both on the Treasury bills as well as the bond side, as you know. Individuals as well as banks are using to deploy this liquidity in the best possible way. So we're seeing that trend within the fixed income market.
And talking about what we also expect within the FX space now, demand still outweighs supply at this moment, and we are waiting for further CBN interventions. Your take around how we'll see the Naira versus the greenback trade in the new week?
So we've seen the Naira around 1,600 levels. As at Wednesday, what we saw was quite a wide rate band, trading, from 1,580 to 1,605, largely driven by the fact that there's more demand than the available supply within the market. We do expect rates to remain around, 1,590 to 1,600 levels, barring any significant inflows from the CBN. We know that key issue at the moment is that supply side. So once we have a lot of supply within the market, that would help to bring down, the rates considerably.
And we've also seen quite the details from the bond auction we've seen this week, and even the OMO auction as well, the surprise elements there. But more focus is also on the next bond auction we'll have on the 26th of this month, and that also precedes the MPC meeting. For you, what should investors expect going forward as we wait for further direction from the Monetary Policy Committee? We're still waiting for inflation numbers as well, and then we're also looking forward to the GDP, Q1 GDP numbers.
Yes, I think you're absolutely right. We await to see what will happen regarding inflation. But what we do expect is to see the MPR around, similar levels regarding rates within the bond as well as fixed income markets. We do expect that we'll continue to see them quite elevated. We had a Treasury bond auction last week, where we still see the long in at around 19.6%, which represents around 24%, yield. So we do expect to see these rates at elevated levels, as we continue to attract a lot of local as well as foreign investors within this instrument who are looking to, seek high yielding returns on their investments.
And in terms of the allotment levels for the expectations of this bond auction later this month, your take around that?
Yeah, so we're going to see around a similar size, so anywhere from 150 to 200 for the 2029s, and we're going to see a similar one for the 2033. So in total, you're looking at anywhere around 400 billion. Within the NTB auction next month, we do expect, we have one next week, where we're going to see about 550 billion offered across the standard maturities, which is the 91, the 182, as well as 364. And then two weeks on from there, there's a further 500 billion that's going to be offered. So just in summary, around 400 billion for the bond auction this month, and around 1 trillion for the Treasury bills auction that's going to take place this month.
Ademola, thanks a lot for your time on the show today. We'll leave the conversation here. That was Ademola Osuntoki, Treasury Team Lead at Axis Bank.